Hi guys, my name is Eng Tang with Tozy Capital. I'm excited to present or discuss market updates for Bitcoin mining and all of our mining related funds. It's going to be me today. We had Ryan just had a baby. Ryan Beatty just had a baby yesterday. If you want to wish him congratulations, he just had a baby boy. And Shiv is driving on the way to somewhere, so he couldn't make it. Unfortunately, it's just gonna be me rambling to myself. It's gonna be weird because I usually have somebody to talk to. If you guys have any questions, feel free to add in the Q&A. That's how I'll try to get to everybody. Moderating and presenting is gonna be a little difficult, but we'll get through this. Can everybody see my screen, the slide? All right, thank you. So today I'm going to be presenting updates for Bitcoin mining and really provide some market updates, stuff that I've been discussing over the recent asset update webinars, as well as what's going on and some interesting new opportunities as well. So what's going on in the market? It's gone down. It's gone down significantly in the past few months. That's been not great. But since this touches low, it's gone up around 33%. So things are trending up, although I do expect the market to not bounce back too significantly until there's a potentially bigger catalyst, a ceasefire in Ukraine. But why has the market gone down? I want to go through this story with everybody because I think it highlights the opportunities and risks that present itself in crypto and Bitcoin mining, all very related things. First, Terra Luna contagion. And really, this is a butterfly effect of all these really high-flying coins or funds like the Three Arrows Capital leveraging their collateral assets of Bitcoin against their own coins, which when that falls, unlike leveraging, taking a loan against your house, as long as you pay your monthly payments, they're not going to sell your house out of you. But if you in crypto, when you take a loan against your crypto assets using Bitcoin, typically as collateral, and it's at a 50% LTV, all of a sudden, if Bitcoin drops by 25, 30%, significant enough to essentially liquidate yourself, you're now a forced seller. So Terra Luna created a forced selling domino that caused AC, 3AC, Three Arrows Capital, and a couple other funds to essentially be forced sellers of Bitcoin. This created a very significant domino effect, driving down Bitcoin price. That then created a lot of holes in many crypto lenders, and very sorry to hear if any of you guys haven't been affected by this. It's a very sad thing right now, but these crypto lenders had lent significant amount of assets to Three Arrows Capital, to other funds. And when they went belly up because of this liquidation contagion, that caused more panic and, of course, distress amongst the entire crypto sphere. And really the biggest driver for a lot of this is when CPI prints of 8.5%, the Fed Reserve is mandated to really keep inflation low and unemployment low. And what it has as an arsenal is increasing interest rates. Increasing interest rates from zero effectively to anything means that all risk assets has gone down. Risk assets like tech stocks and crypto, in my opinion, is a liquidity sponge. When there's excess liquidity, crypto is the last thing to go up, and it goes up very dramatically. When there's a decrease in liquidity, crypto is the thing that goes down the most dramatically. So this reduced liquidity has driven a lot of what's going on in the market and the reduction in the market price. So with energy prices going up, what does that mean? That's also another headwind for a lot of Bitcoin miners. That's created some more significant headwinds around expansion plans for most other miners Obviously, the war in Ukraine had a huge impact. And of course, that has impact on inflation. But then that also has an impact on when there's a heat wave, which is what we've been experiencing for the last 2-3 months in Texas and other parts of America, where some of our miners are located. That means that usually we curtail our energy usage when energy prices is very high. A lot of times, these big data centers are essentially just energy arbitrage companies. They're buying energy at a very low price and then selling it in the form of Bitcoin. And on the opposite end, when energy goes up, energy prices go up. And a few weeks ago, if you ran a data center, you could have sold energy for around 90 times what it would have cost to actually make Bitcoin, because that's how huge of a spike in the grid, demand in the grid because of a dramatic heat wave. So this causes some significant tailwinds as well, with both obviously expansion plans of other miners as well as our miners going down a little bit more often than expected. I want to talk about the 3 pillars of Bitcoin mining and what catalyzes Bitcoin mining at industrial scale. One, miners, of course. So with the availability of miners, there are newer miners coming out, although they've been significantly delayed and silicon chips are being ordered less and less now. Power is still very much a huge component of this whole factor of everything. And power is the thing that has gone up very much in price. And capital has been very abundant last year. That drove up Bitcoin price, of course, and Bitcoin miner price. And so with now big capital, as many probably know, is very scarce. And that has huge impacts on other miners. A lot of miners are profitable, but the ones that are profitable are the ones that took leverage. When you get easy capital and buy Bitcoin miners at $10,000, and now they fall to $4,000 or $3,500, and you still owe $5,000 on that miner, you're now underwater. So a lot of miners are in this situation, which presents some pretty interesting opportunities to buy some distressed miners. I do want to highlight power here because one of the good things about our funds, especially Fund 4, we locked in a power contract in Q3, and Compute North did lock in their power contract, and it created a hedge strategy in April that allowed them to lock in very low power rate, around 4 cents. Of course, that helps us reduce our costs as well. So I want to highlight that because I think there's still a lot of great assets in this investment. The power contract is one of the primary assets. I think is an amazing asset to note. Celsius approached me the other day to try to buy my capacity at Compute North, and that deal would have probably netted the investment close to $140,000 a month in net profit, because that's what the market rate of power is nowadays. Obviously, we're not going to do that because we need to mine on Bitcoin. But it just highlights sort of the disparity of what our power contract was versus what the market is, which is significant disparity. So all this really factors into 2 things, and to 2 things that makes Bitcoin go around, and what drives or the economics of this investment. One, of course, is the Bitcoin price, which I discussed. The second is difficulty. And you can see that difficulty has gone down as Bitcoin goes down. And it's a lagging indicator. It's a lagging metric. When Bitcoin goes down, Bitcoin miners will potentially unplug after they see a few months of unprofitability. That has happened on the fringes. Other miners that have high energy costs or haven't hedged energy costs, and the energy cost is 7-8 cents because nat gas is double what it was last year, and they're using energy from the grid, and they have older energy inefficient miners. Those guys have made the decision likely to unplug the miners because it costs more to run them than just to buy Bitcoin on the spot market. Now, my theory of difficulty going down when big price goes down plays here, but I thought it would have gone down a little bit more. But I think that the thesis now is it's not necessarily about difficulty going down, it's about difficulty not going up significantly. in our models, for most of our models, and not being fund specific, we had difficulty going up around 4 to 6% a month. It's gone down 3 to 4% a month for the last 3 months, although the last recent movement has mean it's gone up. So when it goes up, that means that a lot of miners, a lot of companies make big capital investments well in advance. And when Bitcoin price goes down, those investments still needs to be deployed. Those miners still need to be deployed. And so this is going to take a little bit of lag from the price of Bitcoin into the impact of difficulty and the competition of Bitcoin mining. It's very similar to oil drilling. In fact, if when oil price goes up, people want to drill more oil, but it takes usually quite a bit of time to get the capital and then invest the capital and then deploy the assets of mining rigs and whatnot, drilling rigs, and then get the oil out. So mining is very similar, though slightly shorter cycle. I want to, and guys, feel free to ask questions along the way. Otherwise, I'm just going to talk to myself and it's going to feel weird. I want to highlight our largest site deployment is going to be in Granbury, Texas. I was there a few weeks ago with our good friends, Ryan McKenna and Sean, and then Ryan Beatty. And I want to share this video if you guys can see it. So this is a video of, hopefully you guys can see it, of the Granbury, Texas site filmed earlier this year, a couple of months ago. And it highlights sort of the, with Bitcoin mining, it's going to be always close to power. And when it's close to power, you're going to get the best source of energy, lowest cost of production. So you can see these rows that are being built, and it's built out more now, where our miners are being installed. Those are the containers. Hopefully you can see it, where you can see where our miners are being installed. You can see the video? Is it working now? So we had our team there down earlier this week on Tuesday to check out the electrification timing. And currently they're still telling us, or we'll be hashing very soon. Electrification is really the key driver point here. We're going to try to get our miners already have been delivered to the warehouse in America. So it's ready, recovered. And then we had 2,000 of miners already installed in the containers. It just doesn't have power yet. So hoping to get power on as soon as possible. This is Granbury, Texas. I might be saying it wrong. Is it Granbury? I also want to, if somebody's asking about a chat, it's going to be very hard to chat. I think the chat should be open, but feel free to just ask the questions in the Q&A, of course. I'm looking at all of them. One investor asked, why didn't Celsius approach Compute Nerve? Because Compute Nerve is full capacity. I've asked them for additional capacity as well. They don't have any. Okay, I will continue. I want to highlight also what's going on with the portal. So as many of you guys know, our investor portal is not active anymore, unfortunately, because of, I think I sent the update because of what happened with our developers. I no longer have access to that portal. We're remedying this over the last 3 weeks. I've been working on a new development using Airtable and Bubble to essentially create a simple portal where you can add your Bitcoin address, change your distribution preference, adjust your Bitcoin address, as well as have a historical record. Our Syndication Pro portal is still active and still working. We will also work on creating reporting and accounting in the Syndication Pro portal so that it matches this Bitcoin mining portal. It should be much smoother this time around, meaning that we'll be sending everybody an invite. We have everyone's data ready, and we'll just ask you to adjust your wallet as needed or preference as needed. I do appreciate everyone's patience on this. I know this is a little bit challenging, especially since I'm very much understaffed right now. Brian has a baby, and we don't have any developers on staff except our part-time that I hired to work on this. It should effectively be a very similar thing, and I'm hoping to have it delivered by the end of the month. And then, of course, we'll probably do a manual distribution earlier than that, of course. Before I go into this, I want to see if I can answer any questions. Nope. Okay, so I want to discuss some pretty interesting opportunities, and one is a potential merger. So the potential merger really is something I've been talking to my friends at Blockmetrics for the last 8 months. Really, I've known them for nearly a year, and their business model is very similar to ours in terms of scaling Bitcoin mining. They have some pretty solid experience from a perspective of taking companies public. I talk to Nevin every day, and they're the major shareholders. David and Keith have taken companies public, as well as are very versed in the investment banking world. Why am I highlighting this now? I think this is something that we've gotten a little bit more serious talks into, and I wanted to just highlight that as a potential thing that I've been exploring and looking into. And so one of the things that, this is their slide. One of their backgrounds is they've raised $50 million at a post-money valuation of $216 million. And essentially, they're looking to acquire or merge with a very similar size company, namely Tozi Capital in this case. And with the scale of the mining operations and taking the combined entities public using a reverse merger into an existing company provides the best potential benefit for an exit liquidity. And so they've sent me this slide, and take it for what it is in terms of their perspective of valuation. I want to highlight what this table what this table means. So their thesis is the market cap of Marathon, Riot, Hut 8 is currently around $3.34 billion. Their combined EH, which is exahash. So an exahash is 1,000 petahash, and 1 petahash is 1,000 terahash, is 10.9. And so the market cap per exahash, which is how we typically value Bitcoin mining companies, although not always, of course, it's dependent on growth trajectories and other situations, especially with if somebody has great power contracts, that helps a lot. And a combined potential entity of Tozy Capital and Blockmetrics would be roughly 1.7 exahash. Tozy Capital is actually a bigger entity right now with Blockmetrics. And the exit valuation based on today's market cap per exahash would be around $500 million. So Tozy Capital representing half of that likely. Yeah, I think this is a very interesting play scenario to look at. I would need to do a lot more due diligence on it. But the market high of last year highlighted a much bigger multiple, of course, with a combined market value of $5 billion. It's very tantalizing, of course. And if the potential exit of 60% of market high, I think that's what their perspective is. I don't think we'll get there, but even if we get to today's market at today's valuation, that would be a significant multiple on everyone's capital investment. Because usually last year, when everyone was trying to go public with SPACs and whatnot, typically you saw an 8 to 10 times multiple on the terahash or the purchase of those miners, which is why there was an arms race to acquire as many miners as possible and grow that significantly. I do have a term sheet from them to merge. The sticking points I've had so far has been more on distributions. They would probably want me to stop distributions if we were going to merge, which is not necessarily the business model we have now. And I don't know if it's the right timing to merge, but their thesis is they want to merge so that when the market does come back, which could take a year or longer, or maybe shorter, I don't know, that we are in a prime position to go public when that happens. So they've gotten the green light, and I'm going through some audits to make sure that in the case that potentially happens, we can quickly do that. This would potentially be a reverse merger. Everyone would receive shares. I don't know if there will be any restrictions on terms of time to sell the shares, but I think I would only do this merger if this is significantly beneficial for the investors. All right, I have some questions on that. One person asks, how would a potential merger affect our Bitcoin investments? The potential merger would essentially give you a share of this new entity, and then when the entity goes public, you can then sell your shares at the market value of that public company. Does investors have to vote unanimously for the merger to happen? No, I do have broad rights to do that, but I would definitely seek everyone's advice and understanding. My intention of this investment was never to go public. I wouldn't necessarily keep a very active role going forward if we did go public. I don't have any desire to run a public company. I would, of course, demand some board seats. You want to see the term sheet? This is the term sheet that they sent. Happy to put that in. I signed it. They sent it a month ago. They keep asking me to consider. Investor asks, what are they offering in terms of valuation for Tozy? How does that compare to how much we have raised from LP? So it's not really a valuation in terms of offering. It's more of a merger, essentially a 50-50 or something like that, maybe potentially a little bit different based on the term sheet of shared exahash, with them taking on a little bit more class of shares because they would be running the operations and they have the financial connections, investment banking and institutional markets to go public. When I met with them last in Austin during Consensus, they had a lot of investment bankers ready to pounce on the deal when the market turns. Obviously, the market's not ready for going public. Their thesis has been going public potentially in Q1 of next year. This has moved from when I discussed with them, even in April, we talked about Q4 exit. And if we merge, we would, and this is a sticking point, we would have to stop distributions. because they don't do distributions. Their investment is to, like most Bitcoin mining investments, is to Bitcoin and grow it, and then use that to buy more assets and then acquire more assets and grow, allowing the investors to take advantage of that growth. But of course, that's a very significant departure from the current investment model. So that's why I'm not considering, and then I am considering it, but I would need to see some light in terms of what the market looks like. I think there's potentially a option to do a potential merger where we agree if this happens. I am trying to get the distributions kept. The other issue has been on taxes. They use standard GAAP accounting rules, although I think they do a 1-year acceleration. We do 1-year acceleration, but obviously theirs is a theirs is a pass-through entity, so we still have the same pass-through entity, but in a corporate scenario. How would that work? I'm not sure, especially with a public company, especially when the depreciation part. Investor asks, what happens to my initial investment? If I assume we merge, I guess you would be transformed into those shares of that company. I wouldn't do this unless it presents a significant opportunity above what I think mining could present. And the thesis before the market's been doing what it's doing is that going public presents a significant alpha versus Bitcoin mining in itself. And even last year, it was 8 to 10x what it would have been. And right now, if based on everyone's investment, it would still present close to a 2 to 3x multiple. Now, whether this is actually believable, this is how they're presenting it from this fairly standard analysis. So I do have some great questions on the merger. I'm not prepared to answer all those questions, but it's good questions. I will work on gathering for potentially maybe an asset update later. Bear with me because I have no moderator. The merger would include all funds, yes. And it would be probably based on the terahash allocated to the fund and the contracts allocated to the fund. I would, of course, push to create as much equality for all investors as possible. How would it translate the number of shares? I don't know, but it would be, in this merger, we would constitute half of the exahash. And on the terms, they propose that it would constitute 45% of the Class B shares. I am pushing for two board seats. They have currently 3 board seats, so I would probably want at least 2. So what type of energy is Blockmetrics using for mining? It is not really, it's actually, they use Compute Nerve. They use the same hosting facilities as us. They use all the same people. In fact, from an operations perspective, we're very similar in nature. We have all the same vendors and same people involved. So it goes hand in hand. And so that's why we've been collaborating on a lot of different things. We're actually working on a data center at one point. The term sheet, if accepted, would effectively exit the investors. No, wouldn't exit the investors. It would provide the investors shares, equivalent shares, which when the merger constitutes, and then it's merger first, and I think it's reverse merger. It's merger of Tozi and Blockmetrics, and then a reverse merger into an existing publicly traded company, that's Dormant publicly traded company. If you know what that is, you probably know more than me, but that's how they framed it. And then at that point, there would be a liquidity option. So at any day you could sell if there's no event. Could investors be paid out at time of merger? So I said on the public market offering. Yes, we will have the recording. Is this merger on Bitcoin mining portion? It's just on the Bitcoin mining portion, not the real estate portfolio. I do have grand plans for our real estate portfolio, especially senior living. That's some really interesting REIT opportunities in the near future. if the merger goes through, you said the plan is for them to go public. When the market turns around, what if it takes more than a year or two and never, we would have to wait? Yes, that's why I've been very hesitant. That's why I did not accept the merger 3 months ago when the market dipped or crashed. It just didn't make sense to withhold distributions or do anything. Obviously, withholding distributions provides them more capital and a balance sheet to grow the company. I'm definitely open for feedback and advice. Feel free to contact me if you are an expert in this or want to see the term sheet or provide advice if you have any experience in this. Now, this does highlight that if we wind back up to last year, definitely be a 9-figure club. We all have our fantasies, but I think it's slightly realistic. If possible, would be interesting to get example. Okay, don't know what that means. If the merger happens, how would our investments in Bitcoin mining translate number of shares? So just be pro rata of your hash rate, and yeah, just gonna leave. We actually currently have more rigs than them, so we're actually a bigger company than them. So I guess that was also one sticking point. I didn't know how to do that because they didn't want to lose control. That would be a bigger company than them. In many ways, I think I know I have a lot more things and more connections to them, and I've been helping them on some things. Even if you ever read my CNBC article where I was featured on Bitcoin mining, you can see Blockmetrics and Nevin on the article. Would you be updating distributions in Kitchen Pro? Yes, we will. Please bear with me on all the accounting and the Porto stuff. Very short-handed and something that we will do fairly soon. Apologize for the lack of communication and transparency here, especially since we're very short staffed. Yes, we will have a dashboard for Bitcoin Mine as well. We've definitely got a lot of setbacks on the Portal base of past. Worked very hard on getting the initial Portal going online in like 3 months, and it's a very big setback. But moving along, learn a lot of lessons trying to get that Portal up and running. A lot of my stress, guys, has been really about creating a great customer experience for investors. I admittedly underestimated the administrative burden it takes to send 1,000 people Bitcoin and ACH. That's how many investors we have across all of our funds. We have 5 funds, actually. It's quite a lot, and it takes a lot of, I'm slightly under-resourced for now. We are receiving distributions for August. Yes. I don't have that exactly when. I will try to do that as soon as possible. To those who select to earn, our distributions were held in Code Wallet relationships. Yes, we have all of our wallets. So for those who selected to earn yield, and this is, I think it was a good intention at the time, anyone can go to, I use Amber Group, or it's called WellFin now. And I receive 4% interest rates on the deposit of Bitcoin. When the calamity of all these Celsius and Voyager happened, I started to withdraw everything. And so it's all in our Code wallets. So we have it safe. And for those who select to earn yield, we will be sending those back. Again, please bear with me on that timing while we're short staffed. I might go. It's it's the article. Let's see if I can put the article in the chat. So what would the rough timeline for the investment to reach 2 or 3x multiple? That's depends on what you're referring to, Alpesh, if that's related to return of capital. If Bitcoin stays where it's at, it would be, and the investment was just going to be sending distributions based on the current process, I would say, depending on the fund, it would be unlikely to return 100% of capital if Bitcoin stays where it's at. Obviously, you can do the math yourself, guys. I think we want to highlight that Bitcoin is a very sensitive number at these levels. This is an average of across all funds. I didn't want to specify a fund. when our cost of mining is close to 15K. When Bitcoin goes up, profit goes up a lot more if everything else constant. Now, this is also a fallacy because if Bitcoin goes up to 50K or 100K, difficulty will go up a lot as well. Although I do think that capital is very reluctant to invest right now, which presents opportunities. I think there's some opportunities to buy from Celsius distressed assets if you have capital. And I think there's some opportunities to grow and expand and essentially acquire these fairly distressed companies that have over leverage. But one thing I want to highlight is if if just like oil, when all the private equity went away from oil, when oil crashed, private equity has been very reluctant to get back into oil because of the previous experience. I don't know if that would be the case with Bitcoin mining, but it could be the case, which means that there'd be less competition and growth. But it would be pretty wise to assume that if Bitcoin went to 100K, difficulty would go up. And so this is talking about holding everything constant. How much have Blockmetrics raised in total for investors? They have raised close to $80 million in debt and equity. We have raised a very similar amount, slightly less, slightly more. And although we have more assets in them, more rigs. Good question. Is Tozi okay with those earned yield distributions in Tozi wallets? I asked because I invested through Solo 4K and I made tread lightly. Yes, we will honor any holding of your Bitcoin. Obviously, that was sort of the intention of earned yield for 4Ks that don't allow Bitcoin to be held. So we can send the distribution when you want it. So it's held in a secure code wallet right now. Sounds like the merger, once we merge, we double the size of mining operations. Do you happen to know how capacity compares to others known mining operations? Yes. So this just highlights that, like the slide, like basically the combined exahash of these three companies is 10.9, and we would be combined at 1.7. Truth be told, we actually are more than half of this. So we do represent 9%, maybe 10% of the combined production of these three major companies, Tozi Capital, Solo. So we have a pretty big, one of the biggest mining companies. And I just met with Atlas Mining last night. They have 200,000 rigs, they're an Asian-based company, and they want to partner on a few ventures as they want to have an American counterparty. Tozi has been more capital efficient. We had some good timing. It could be better, to be honest. We just had money now and some really great opportunities to buy. But we have not taken any debt, which allows us to not be in distress, not allows us. Our business model has always been a profitable, go forward business model of paying investors with the net of what we mine. Unfortunately, the net of what we mine is lower and lower because the costs that we have is fixed. Just to clarify, if we set up to receive ACH distributions, are you still holding June and July payments until the new portal is complete? No, we should have sent everybody the June and July payouts. If you haven't, please email me and investors at tozicapital.com. We have had a lot of questions around June, July distribution specifically for ACH. The main answer has been we use Mercury, which we still use right now, Mercury as banking, online banking, and we use their API solution to essentially do an automatic send using the APIs versus a notcha file, kind of in the reads with Chase. So in the past, it said a distribution from Chase from Tozi Mining or whatever related fund, but now it should be a line item saying Mercury Credit Web. So if you're seeing a ACH deposit and it's called Mercury Credit Web, that's from us. And it would have been sent in late June and early July, mid-July. So I'm pretty sure we sent all the ACH distributions. If we haven't, we probably don't. We had some. Please let us know. Was your break even to mine Bitcoin? Depends on the fund, but the average is around 15K. And why is that higher than before? Because of difficulty going up. And then, of course, we have had some, we want to reserve some, we've had to spend some money on repairs as well, as we have 1% failure rate every quarter. We had to repair those miners. We had to ship them to Bitmain for if they were under warranty, or some of our miners now post warranty. And so we have to pay out of pocket for those. Sounds like, if I'm reading, the price of Texas electricity is influenced by natural gas. Yeah, so this is a good question. Granbury site is protected, even though it's mostly nat gas. It's right next to Constellation Energy. Constellation has a significant stake in that Granbury, Texas site. What Compute Network did was they put a hedge, essentially a fixed lock on energy prices in April, early April, which was a much better time to put that. So they're locked in their price around 4 cents, I believe. So that helps us, which were average of 5.8 and 6.6 cents for our additional capacity. I can take a poll. How do you take a poll? I'm gonna create a poll right now. This is where having a moderator helps. Okay, if you guys want to answer that poll, free. If you guys can see it. If you can't, okay, now you should have that option to, obviously just a lot of data and things that we need to look at. And the biggest question for me would be, we wouldn't have any control of the investment afterwards. We would stop distributions, and it's all very market dependent. So the last part is really if the market does turn, it would present a significant multiple opportunity, meaning that even in today's market valuation of these other companies, we would probably get around 2.5x multiple on our capital investment. Yes, to emerge. If you joined late, we were talking about a merger opportunity that I have a term sheet for. Feel free to watch the recording, as I need to go in 7 minutes. Yeah, so if the merger happens, and is how much a guarantee would it be the actual stock listing will happen? That's also one of my biggest concerns. So I've been trying to figure out how we can do this on a, how can we maintain independence until we have that, and that actual stock listing IPO imminent. Would the merger help alleviate the operational problems that Tozi is experiencing? A lot of operational problems are mostly around my initial investment thesis of providing you guys monthly Bitcoin and cash flow distributions. No one else does that. Everyone tells me I'm crazy to do that. And they have, maybe it was easier to do with 100 people. It's very hard to do with 1,000. I'm very close to resolving that, I hope. So it's definitely been one of the biggest headaches. So I went to really focus still on that. I'm trying to resolve that. If the merger doesn't go through, I don't think we're dependent on the merger going through or not. Remember, this merger would only happen if we believe that this is a better outcome for our investment than not merging. And The thesis is public markets value Bitcoin miners at a higher multiple than private markets. And that's true. And it was true at a multiple of 8 times in Q4, Q3 last year. So that's why everybody's trying to go public, and a lot of people did. A lot of people went public, and I think Rhodium had public market exit or close to that, $1.7 billion. A couple other companies had public market exit. Tozi Capital at that time could have been valued at $1 billion. Unfortunately, we didn't do that. We want to be ready if it happens again. Maybe. Could I create a Q&A doc? Better yet, I think we should have, I'll send a question for everybody to ask, or a form for everybody to ask questions, and then I'll relay that to Blockmetrics guy. But currently, the majority is no, which I'm also slightly leaning towards. Mostly because I would change the investment thesis significantly, and I don't know what line of sight there is to actually going public. But if we don't go, the thesis here is if we don't merge now, they would merge with another company, and we would be the third merger. So it would be an acquired company, not a merged company. So it would be less of a merger of equals, more of an acquisition. It's too soon. Yeah, probably. I don't know what the valuation for equity would be. Obviously, it depends on market conditions. Based on the slide that I showed, if you invest $1 million, it would be worth $2.5 million, something like that. If this is an equity transaction, will Blockmetrics assume more debt to acquire merge Tozi? Would they get Tozi rigs at a discount instead of them having to raise capital to deploy and own assets? So they would get Tozi rigs without paying any cash. That's obviously why they want to do this. We would get shares of the company in equivalence to the hash rate. So just to be clear, they're not trying to buy us. If they bought us, we would be, for cash, we would be worth significantly less. I think you would have a significant write down of your investment, closer to 50%. Public markets present a different animal altogether because they value EBITDA, and future-looking Bitcoin miners present a lot of EBITDA and cash flow, potentially. What is your business hesitation not to merge? Timing and the disruption of distributions, and unknown understanding of tax implications around depreciation, especially for Fund 4 who hasn't received that depreciation yet. Yeah, this poll is not a binding poll, guys. It's just more of a, somebody just asked for a poll and I just put it in. Don't feel that whatever the answer to this poll is binding. Obviously, this needs to be a lot more due diligence. Although I know I'm focused on many things. One of them is the portal. If the merger happens, what happens in the scenario of BTC dropping to a very low price? Effective timeline of a new company going public? Yeah, so if the merger happens, likely what they would like to do is, it would be an investment into a growth company that would, there wouldn't be any public valuation of the company until it goes public. So it would just be building and growing without any distributions in this case. But you get all the audits and all the financial reports similar to any private company. How do we value the deal of this on price valuation? What is the post-merger share proportion to Tozi versus Blockmetrics? Well, we would be a 50-50. It's, well, depending on who had control rights, I certainly negotiate. Tozi Capital is a bigger company than Blockmetrics in terms of hash rate, at the very least. They have way more people. Probably hire at least one person, maybe. Probably. What is Blockmetrics debt to asset ratio currently? We do have some debt on it, so we would need to figure that out. Do they have any BTC assets in yield platforms? I did not know. I know they have some significant balance sheet of BTC. Yeah, so I'm definitely a cash flow guy. Somebody asked, I would just add the consideration should be made to those who live off of cash flow. I don't know if you can do a partial, you can go in the merger, you can go out, because then I would be running essentially the same company on the TOSI side and have probably advisory board role on the Blockmetrics combined Blockmetrics TOSI side. Definitely a lot of things to consider. Much more interesting when it was Bitcoin was at 45K, 50K. When would Bitcoin be sold? So I'm gonna probably within a week. I was really hoping to have a little bit more final, closer to finishing the dashboard. I'm also waiting on some expenses from Compute North. Yeah, so Jackie asked, when is the August distribution? Probably within a week. And I'm sorry we're delayed this month. Again, the portal and just significant headwinds around operations. Developer leaving us and the customer support leaving us. A lot of my headaches, a lot of my stress has been more on the operation side of TOSI. And it's really on the platform side, investment side, not necessarily on the operations of the Bitcoin mining side. I think that's actually going well, if not lower expectations. Could the new portal be set up to show the real-time profitability of the Bitcoin mining operations? I guess it depends on the price of Bitcoin. I think that's an interesting point. I'd love for you to suggest what that would look like. But it's a good point. I don't know. I think there's certainly ways to make it better. I'm just focused on trying to deliver it first. The recording will be shared. All right, it's 6:03. I appreciate everyone's questions. I'm sorry if I didn't get to anybody. It's very hard to moderate, present, and do this. I hope, I hope if I got to most of your questions. Currently, the merger is, but it's okay. It's not binding, and obviously, not everyone has information. Anyways, hopefully everyone wishes Ryan good luck with new baby. He's got a girl, third baby. And we will hopefully start mining soon on Fund 4 on the expansion, before X expansion. And over the next week or so, probably do the August distribution or for the July mining, and then launching the portal, trying to get out by this month. So a lot to do, very short staff. So I appreciate everyone's patience. Thank you again for attending. Have a good night, guys. Bye-bye.